Good morning, everybody out there, and welcome. I want to start off firstly by thanking each of you for taking time out of your day and your busy schedules to join us for this session. I hope it's going to be very informative for you today. We'll try not to last too long. We are at the top of the hour. We do want to start on time, so let's jump right in. My name is Jeff Dorse. I am excited to be here today to talk to you about why it may be time for you to start considering the possibility that your business may have additional sales tax responsibilities, and if so, how I can help. I will also discuss a few other tax items that you may need to be aware of as a Georgia agribusiness. A few logistical items of note. The first is that if you do have a question, please feel free to send it via the chat. If we have time at the end, I will address it. Secondly, if we do run out of time, I can be long-winded. So if we run out of time, my contact information will be on the last slide. Feel free to use it. Reach out to me directly with your question, okay? Also, if you stick around to the end of the presentation, I do have a special offer for you, so don't miss it. Again, my name is Jeff Dorse. I am the SALT practice leader here with Malden and Jenkins. For those of you that are not familiar with Malden and Jenkins, we are a full-service CPA firm. We were founded in Albany, Georgia in 1918, so we are over 100 years old, and we are very proud of that. We have 8 locations in 5 states throughout the Southeast. Okay. My background prior to Malden and Jenkins, I spent 12 plus years with UPS in their multi-state income tax and sales tax group. I mentioned that SALT, I was a SALT practice leader. For those of you who are not familiar with that, SALT is an acronym. It stands for state and local tax. It includes state income tax. It also includes sales tax, as well as other tax types like personal property tax, withholding tax, and some of the other state tax types. For this webinar, we are not going to talk about those. We're going to talk about sales tax, and we're going to dabble just a little bit in the multi-state income tax. The reason we are here today, the reason we are talking to you today about the possibility of additional sales tax collection and filing obligations is because over the last decade plus or so, I have watched how the sales tax landscape has morphed and changed into what it is and what we know it is today. It started, like I said, a decade, 2 decades ago when states started realizing that they were losing revenue mainly to the change in purchasing behavior and habits of consumers. And when I say losing revenue, what I mean by that is sales tax revenue historically has been a very large revenue source for state departments, especially compared to other tax types. And that's still true. It's just not quite as large of a revenue source as it historically has been. Okay, so how and what consumers purchased, that's been rapidly changing. Our habits have changed, especially with the internet. And it's just causing these states to gradually lose money as a percentage to other tax types. So states begin to slowly understand that they were losing money. They begin to look and analyze at these trends and figure out what's changed. And over the next couple of years, over the last decade or so, they begin to kind of update sales tax laws to try to address these things. So some of these trends that we've seen in sales tax laws include new updated definitions of key terms. Think tangible personal property. How do states define that? What does it include today versus what it included, 20 years ago? Maybe some things like digital goods, right? Maybe some services. They're trying to expand their tax base. They've also implemented new laws addressing products that we have today that we did not have maybe 20 years ago. Think software as a service, right? A lot of those types of digital services, digital electronic goods, so on and so forth. They also have laws that have addressed changing products. Believe it or not, there are products that we had 20 years ago that we still have today, but they are very different, right? When we buy these products, we buy them differently, we receive them differently, right? We use them differently. So they've tried to change and update sales tax laws to incorporate those products so that they still can tax them. The internet is ever evolving today. It has new uses and new capabilities that it didn't have 10 years ago. The emergence of online marketplaces, think the Amazon and Etsy's of the world. They have made it possible and, quite frankly, I think very, very easy for businesses to sell their products throughout the world. We've seen advancements in things like computer learning, artificial intelligence, computer automation. All of these things have changed the way as businesses we do things. All right, so let's get to it. I'm going to walk you through how and why you may have additional sales tax obligations, and how, if so, you can be fully compliant with those sales tax obligations by barely lifting a finger. So no more spending weeks doing manual data entry, and also still putting some of your hard-earned money back into your pockets. When we talk about these concepts, typically there are 3 misconceptions that I like to highlight. There are probably more. In fact, I know there's more, but I like to highlight these 3, okay, relating to sales tax obligations that many business owners have. The first misconception I want to talk about, and I hear this all the time, is my business is only in the state of Georgia. And that's, not specific to the state of Georgia. It's whatever your home-based state is. For this webinar, we're talking about Georgia agribusinesses, so we're going to focus on Georgia. I hear all the time, my business is only in Georgia. I do not leave the state, right? So I do not have to worry about other states' sales tax. If you've ever said that or you've ever thought about that, that is wrong. The catalyst to why that is wrong now is known as Wayfarer. Wayfarer is a Supreme Court case and decision, and it set a new precedent for when and how a state can hold a company responsible for collecting and remitting their sales tax. The requirement is now what we refer to as economic nexus, which means merely making sales and or shipping product into a state creates a sufficient relationship with that state for you as a business to be required to collect that state's sales tax. Wayfarer is a game changer. Make no mistake about it. It has changed things dramatically. It is now very easy to create a sales tax collection obligation by simply having your customers in that state. The internet and these online marketplaces, the Amazons and Etsy's of the world that we just talked about, they have made it so easy for you to reach new markets and to sell to your customers throughout the U.S. And remember, sales tax collection is a statutory requirement. So what does that mean? It means you do not have a choice. The law requires you to collect and remit if you meet certain requirements. Those requirements are typically a dollar amount threshold of sales within their state or a total number of transactions, okay? And yes, a state will hold you, the retailer, responsible if you meet those. Sales tax is a tax that is owed by the end consumer, typically your customers if you're not making wholesale sales, but they hold the seller, the retailer, by they I mean the states, hold the retailer responsible for collecting and remitting the tax. They hold you in a fiduciary duty. You are acting as an agent collecting the state's money. Why do they do that? It is much easier and much more efficient to audit the seller, one entity, right, versus all of that seller's customers. It is up to you as a business owner to be fully compliant and understand all states' tax laws. Here's a sidebar misconception. I call it misconception 1A. I make wholesale sales only, or I sell only wholesale. I do not have to worry about filing sales tax returns. If you've ever said that, you would also be wrong. Sales tax exempt is not filing exempt. Okay, sales tax exempt means I have received an exemption certificate of some type, right? So I do not have to worry about collecting sales tax. That does not mean you don't have to file those sales tax returns. All right, Wayfarer, that movement typically piggybacks off the definition of gross sales or gross receipts. By default, if it is not further defined, gross includes both taxable and non-taxable sales. Okay, that is why you may have a sales tax filing obligation in a state even if you're making wholesale sales only. The default taxability of the sale of tangible personal property is taxable. It only becomes exempt when you receive the applicable exemption certificate. In this case, if you're doing wholesale or resale, it would be that resale certificate. If you do not have your certificates in order and you are audited, you most likely will be assessed. The easiest way for a state To find out what companies and businesses are doing business within their state is to audit the wholesaler and then check their wholesaler's exemption certificates in their customer list. Then they go audit the wholesaler's customers, right? That's how they get to the people and the businesses within their state. I want to quickly talk about a horror story, so to speak, that is loosely based on some facts of one of our clients. Okay, we have a manufacturing company who makes approximately $20 million of gross sales annually throughout the U.S. They have 1,000 plus customers. All right. So if they make, say, $400,000 of annual sales into a certain state, and that certain state has a 3-year statute of limitations, that is roughly $1.2 million within that state for the 3-year period. Okay. And let's say this company had 65% of their exemption certificates, okay, for whatever reason. That means roughly 35% of their sales would be deemed taxable because they do not have valid exemption certificates. We typically see this 2 scenarios. One, your customers are either out of business or you don't have a good working relationship with them anymore and you can't go back and get those old certificates. Or 2, the auditor just does not allow you to go back and get those old certificates. Okay. So if you have 35% that you don't have exemption certificates for, that's a roughly $420,000 of sales in that state that are now going to be deemed taxable. Okay, even though you thought you were selling wholesale, you didn't have the exemption certificates. Assuming an average tax rate of 7%, the tax bill would be around $30,000. That is before penalty and interest. Yeah, penalty and interest, you're probably talking about $45,000. Okay, that's for one state. Imagine what the total of your audits would be if that fact pattern held true throughout the U.S. You might be talking about $300,000, $400,000, $500,000 of tax you would owe at the end of all these audits. That's why it's a horror story. Okay, misconception number 2. I hear this a lot too, that we've talked about sales tax. You follow sales tax, you understand what your obligations are, so you will now go register in all the jurisdictions where you owe tax collection returns, right? And you will file those sales tax returns each month for your company. Doesn't that sound like the best idea ever? You guys all probably just cringe. You probably got a bad taste in your mouth just from hearing that. I want to give you a little visual aid to kind of visually represent the change in how many sales tax filing obligations you may now have. Okay, this slide compares your filing obligations from January 1, 2018 to January 1, 2020, assuming a lot of things have not changed. What we did is we took the U.S. population census, and then we took $25 million of annual revenue, and we allocated that to all the states based on their population census. Yes, there's some assumptions in there, but for the most part, your sales are going to hold true to this type of sales pattern. Okay, even if it doesn't, it represents it. Okay, so on the left you see January 1, 2018, there is only one filing obligation, that is state of Georgia, assuming you're based in the state of Georgia. The graphic on the right is nothing else has changed except for we're talking about your sales tax filing obligations in January 1, 2020. Look at the difference. Okay, this could be a combination of both sales and or number of transactions within that state, but this is going to be the number of filing obligations you potentially have if you sell throughout the U.S. Right? So there's a lot that has changed. Your obligations have increased dramatically, right? So the amount of tax returns that you potentially now owe has dramatically increased, and we all know that tax returns require a significant amount of time commitment. They require expertise, a lot of training, possibly some software. All of this can be expensive and can be very risk prone. Okay, tax laws can vary state to state and even locality to locality. If you are going to do it yourself, you will find yourself bogged down in hours of research, right? Hours of preparing returns that are a zero value added to your process. You're going to spend your time in states, online portals or websites, tabbing from jurisdiction to jurisdiction, entering different tax types, so on and so forth, right? But that's zero value. You have to do it, but it's not adding to your business. Tax calculation software, that can be very expensive. We talked about that. They can also include hidden charges such as implementation fees, right? Fees to handle notices, troubleshooting if there's issues, also filing charges if you want them to file your returns for you. Many also require you to maintain your own rate tables, okay, your own product mappings by state, or they may still require you to do your own return filings. The penalty of going at this alone, it can be crippling, right? All right, so let's do a really short recap of the two misconceptions we talked about so far. Misconception one was you do not leave the state, so you do not have to worry about other states' sales tax. We talked about why that is wrong, right? Wayfarer. Misconception 1A was the wholesale, where you do not have to worry about sales tax returns because you make wholesale sales only. We talked about why that is now incorrect as well. And then misconception number 2, that you can do it yourself. Again, I'm not going to insult your intelligence and say you cannot do it yourself. It's just not a good use of your time. Jumping into misconception number 3, I hear this a lot. Now what? Jeff, you just told us that our sales tax obligations may have just doubled or tripled, right? Because you make online sales. And it doesn't have to be online sales. It can be catalog sales, phone orders, but you're selling throughout the U.S. And I just told you how expensive and potentially risky it may be to do it yourself. You know, even if you use a sales tax software provider. I know what you're thinking. Well, what do we do now? Okay, it's probably very expensive to outsource anything, right? That's why I'm here. Outsourcing your sales tax function does not have to be expensive. It will cost you pennies on the dollar, and it will be done by an expert who primarily focuses on sales tax and sales tax returns filing. So it's going to be cheaper than what you can do it yourself, and it's going to be done by an expert. All right, jumping to this next slide, I'm going to show you that. Let's think about the actual cost of hiring an employee. If you have to file 45 or 50 sales tax returns per month, you're probably going to hire an employee just to focus on sales tax compliance. Okay, so what are all the costs that go into having another employee in your business, right? Obviously, you got salary requirements. You're going to pay them a salary, but you also have things like benefits. You have retirements, payroll taxes. There's additional risk with having an employee, so on and so forth. Okay, so let's quantify it. A $4,000 employee is anywhere between, $48,000 a year, 12 months out of the year. And then when you add in all of those other costs that we mentioned, right, you get somewhere probably between $60,000 and $70,000 it costs your business to have that employee. And then what do we all do once we hire the employee? We do some type of orientation or training, right? We get them furniture, a desk or a cube, laptop, monitors, computers, so on and so forth, okay? And then within a couple of weeks, they are up and running. But once they are up and running, how many years of sales tax filing obligations experience do they actually have? They may have some, maybe the state of Georgia or 1 or 2 local, but what about multi-states throughout the U.S.? How many times have they filed a Washington B&O return or the Hawaii General Excise Tax return, which you may now be filing? Okay, but what do? You're the business owner, and you just hired this person to file your sales tax returns. So you're going to rely on that person. You're going to rely on them to make decisions for your business that could potentially cost you a lot of money. Well, this next slide, I want to talk about how complicated it can be, especially on an agribusiness side, to file sales tax returns throughout the U.S. We're talking about food right here, okay? So we want to just discuss the different complexities of selling food products throughout the U.S. and filing all the associated sales tax returns. Things we have to consider are your products that you're selling considered prepared food? Are they considered for home consumption or business consumption? Would they fall under items considered to be candy or maybe baked items or baked goods? Do you sell multiple of these item types, right? Do you have to know the difference? Do your systems actually quantify it by product type? Do you know the taxability of each of these product types at each of the state and local levels throughout the U.S.? Do you know the appropriate rates for each of the state and local levels? Many states will exempt food products at the state level, but will tax it at the local level. Or they may give you a reduced rate at the state level. Okay, so you have to know multiple states rates, multiple local rates, okay? And even if you get all of this up and running, you have a good grasp on it, are you monitoring all of this for different tax law changes or rate changes? So just brief example, but it can get very complicated very quickly. Okay, let's do a full recap on the misconceptions. Misconception number one was that you do not leave the state, so you don't have to worry about other states' sales tax filing obligations. We know that to be incorrect, right? Misconception number 1A was the wholesale example, where you do have to file tax returns even if there ended up being net zero tax, you still have to file them. Misconception number 2 was that you could do it yourself. We talked about it. Yes, you can. It's just not a good use of your time with you being a business owner and not a sales tax expert. The misconception number 3, which is why we're here, is how expensive it's going to be for Malden and Jenkins to help you with the outsourced sales tax function. What I do want to throw out there is that the number for the we talked about the $48,000 a year employee. I do not have a client at this point that costs them more than $4,000 a month to file their sales tax returns. Okay, so what I'm telling you that is it's cheaper than hiring somebody to do it yourself. Okay, so we've talked about in detail all these things, all these misconceptions. If you do have further questions relating to your potential sales tax obligations or about these misconceptions, please use my contact information. It will be on the last slide, and reach out to me. We've covered sales tax and how the requirements have changed over the past 24 months. We talked about what you need to look for, right? The total dollar amount of sales within each state or the number of thresholds, depending on the state. So now I do want to move into a few other tax areas and tax opportunities that I do think you need to be aware of. Georgia Agricultural Tax Exemption Program, the GATE program. Most of you likely already know and know how to use your GATE card, right, for making agricultural related purchases without paying sales tax. I'm not going to mention this other than the fact that if you do have questions about maybe what purchases would be covered under the exemption, or if you've just simply never heard of the GATE program, just please reach out to me after we conclude today and we'll discuss, right? I'll tell you everything you need to know. The GATE program is something you have to apply for. It's not a blanket exemption to where you just go use it. Next, and what I want to focus on is the Georgia manufacturing exemptions, okay? Are you aware that Georgia has a very lucrative manufacturing exemption for sales tax purposes? If you manufacture a finished product, and that is a post-agri-production and separate in nature, then you may qualify for additional sales tax exemption. So let me say that again. If you manufacture a finished product, right, that is post or separate from your agricultural production. So you grow, let's say you're a winery and you grow grapes. Once you get the grapes harvested, that's agricultural production up to that point. If you take that grape and you make wine, that process is a manufacturing process, okay? So if it's separate in nature, right, post-agriculture and separate in nature, you may be able to qualify for additional sales tax exemptions. If you purchase machinery, equipment, right, inputs, consumables, etc., during the manufacturing process, you may be paying sales tax when you don't have to, okay? It also may be possible to take both the GATE exemption for agricultural production purchases, as well as the manufacturing exemption for manufacturing purchases by the same company. All right, to analyze this, a sales tax process can be done, right? A sales tax review process, excuse me, and couple that with a refund study, and then that will highlight any areas where you are erroneously paying sales tax, right? And if Malden and Jenkins, if we perform a process review, right, and we identify areas where you're paying sales tax and you shouldn't be, we will compose and submit a refund claim on your behalf. We will help you get your hard-earned money back. This type of review can immediately impact your bottom line if you get a refund claim back, but it also has continuous benefits. It is the gift that keeps on giving because it is an annuity return. I say that because let's say we identify that you pay $50,000 a year in sales tax that you should not be, right? So we may get you a $150,000 refund claim back, but we've now reduced your expense by $50,000 a year going forward. That's why I say it's an annuity return. It's the gift that keeps on giving. Really quickly, a case study to prove this, to show this. This is roughly based on one of our Georgia agribusinesses. The facts are tweaked a little bit, but for confidentiality purposes, but for the most part, it holds true. You have a Georgia Agribusiness that does somewhere in the range of $30 million of annual revenue right throughout the U.S. They are based in Georgia locally. And through a process review and refund study, we were able to file approximately $170,000 worth of refund claims with the Georgia Department of Revenue. It does exist. It is out there if you have the opportunity and you do a process review. So that is the Georgia manufacturing exemption. There are a few other opportunities out there that I want to highlight while we're focusing on this. The first being the Georgia packaging material exemption. Georgia does have a packaging material exemption for sales tax purposes. So if you're buying things like boxes or wrap or strings or labels, those types of things, you may have an opportunity. Okay, that's for sales tax. These other three that you see on the screen are for typically income tax, research and development income tax credits. Many of you guys are agribusinesses, right? So you may be growing a product, whether you're a cattle farmer, dairy farmer, or a peach or strawberry or winery or nuts and pecans, you're growing something. Many of you also sell a retail product that you had to take whatever you grow and you had to change it, right? So let's say you're a peach farmer and you sell peach jelly, and now you want to figure out a way to sell a habanero peach jam. Well, you have to do research and test things, right? You know, test the ingredients, test the manufacturing process, the bottling process, all of that research and that thought that goes into coming up with that new product. And it doesn't have to be a new product. You can spend time trying to better your bottling process, right, or your packaging process, right? So that research and development type focus, if we can properly plan and quantify that, you have both a federal income tax credit as well as a Georgia state income tax credit for your research and development time, okay? Also, cost segregation studies. Many of you have, I'll call it manufacturing facilities. These facilities where you take your product and through your process come up with a different product, right, that you're selling at retail. So if it's changing that facility, right, so we can do a cost segregation study on these larger manufacturing facilities and help you increase your depreciation expense in the current year to save more of your money in your pocket the current year, right? Also, job credits. If you want to expand your business, right, or just move, Georgia has a tiered type rate job credit where, depending on where you're located at, as few as two additional new jobs may give you a job credit in the state of Georgia. Okay, so those opportunities are out there. Obviously, all of these are very fact dependent on your business and what you're doing, right? So it may not make sense to everybody. But when you are aware of it and properly planned, right, so the planning goes into it, these types of things can save your business a significant amount of tax. And the goal with me mentioning these is just to get them in front of you so that you know they exist, so that if and when you would like more information and discuss, you can reach out to us, right? I get it, though. The reason we're talking about it is because we like money. Money's good. We all want more money. I want more money, right? It is irresponsible to make a business decision that negatively affects the bottom line. It may happen, but we don't want it to. Okay, that is especially true when there are better options out there. If the only reason for not making a better decision is because it's a new way of thinking, in this case, I'm talking about outsourcing because you've never done the outsourced sales tax function before, that's the wrong reason not to make the right decision. I'm going to say that again. If the reason you don't make the right decision is because it's a new way of thinking, that's the wrong reason. Okay. One way that I do want to help you with the transition into being fully compliant, if that affects you, is I want to offer you a deal that it's going to be hard to pass up. If you engage with Malden and Jenkins to be your trusted sales tax advisors and help you with your sales tax compliance, right, and you mention this webinar, I will personally pay for the first 3 months of your fees myself. That's right. Your first 3 months are going to be free. Why would I do that? It's because I really, truly believe that finding a way to not spend your time on non-value added stuff is a very, very important step for you and your business. And I want to help you do that. I want to incentivize you doing that. So I will give you your first 3 months free. As a business, there is two directions that I typically think you can go. Direction one is doing the same things, the same, conducting business the same way you've been conducting business for years and years, and it's frankly the way most people, most business will continue. We don't like change, right? That's doing the same old ways, the same old things you've already done. You will be slow to react to changes in sales tax compliance rules and regulations. You may continue to be slow to adopt technology, but you don't have to be. There is another direction. You can be part of the group that is leading the way of doing business, right? You take advantage of technology, take advantage of education. You leverage relationships like maybe the one you have with Malden and Jenkins. Did you guys know that we get preferential pricing on sales tax software if you go through us, right? So you leverage your relationships. You will also free up your time from doing zero value added work, i.e. sales tax returns, so that you can focus on things that matter. You can have more time to work on the core values of your business. Core values are the reasons that you became a business owner in the first place, right? You will be able to work on building efficiencies in your business. You'll be able to focus on product innovation, process innovation, and so on. That is how you will be able to set yourself apart from your competitors who probably will be slow to adopt the technology and the change in habits of doing businesses. All right, I wanted to get to a few questions today at the end of our webinar, but it looks like I am a minute over my time already, so I don't have any time for answering questions. Unfortunately, I was a little long-winded. I did say I could be that way, but I do want to put my information up on the last slide right here. If any of this piqued your interest, if you think it hits home, if it does affect your business and you want to discuss more about it, or if you just simply have more questions, please do not hesitate to reach out to me directly. My information's on the screen. But with that, we will conclude the webinar today. Again, I really appreciate it. I know you are all very busy, so thank you for taking your time out of your busy day to be with us today. I hope you found it informative. Feel free to give us any feedback that you may have, and take care, and God bless you all. Thank you.